The biggest problem with selling options. In this video, you're going to learn the biggest problem that many people have when selling options. Please subscribe to this video, click the notification bell, and also like this video. Let's get started. This video is more for experienced traders. Usually I share my deep thoughts in my trading course, on a phone call, or in the trade alerts. But I want to reveal some secret knowledge so that you're better prepared for trading options. The biggest problem when selling options is that you really shouldn't trade at all when many other people are making money. And the reason for that is that when many other people are making money, there is generally a sense of complacency in the market, and the market has a tendency to be going up. As a result, volatility is really low. During periods of low volatility, the amount of money that you're going to collect when selling options is also going to be extremely low. As a result, it's going to be very difficult to sell options and collect a little bit of premium when the market is going up every single day and you would be making more money by being long stock. The problem with this thinking is that when you sell options, you're able to make money when the market goes up and also when the market is flat and when the market goes down. However, when you're long stock, the only way that you're able to make money is when the market is going up. So this creates a little bit of a problem where inherently human beings don't like thinking that they're missing out on something. As a result, during periods of low volatility, many traders have a tendency to trade too large in order to compensate for the lower amount of premium that they're going to collect. However, this is by far the worst trading strategy because during periods of a volatility expansion, and remember, in September of 2021, we experienced 2 or 3 days where the VIX increased by over 20%. Now, during those days, your existing positions are going to show you a loss. So if you start trading really large when the VIX is low, during periods when the VIX is trading at about 15, then the VIX can double in price and trade to about 25 or 30 in 1 or 2 days. And if the VIX does expand to 25 or 30, then all of your existing positions are going to end up showing you a loss. So the biggest problem when trading options is that you're going to be tempted to trade often and trade large during the exact time when you should not be trading large and trading often. And the reason for this is that during periods of complacency, long stockholders are going to be making money and the market is going to be going up every single day. You are not going to want to feel like you're missing out. And as a result, you're going to be trading larger, which is precisely the wrong thing to do when volatility is low. So right now, which is October 25th, the VIX is trading at about 15 and the market is relatively close to its 52-week high. So what's the solution? What's the best way to keep up with the market and to make a lot of money? And the answer is nothing. Trade small, take advantage of a few outlier moves, such as recently PayPal was down around 20% and Facebook was also down around 20%, and even Amazon is about 10 or 15% off its 52-week high. But besides those three underlyings and potentially Intel as well, I think that the best thing to do is to trade relatively small, especially considering that the VIX is trading at around 15. And really, that's just the nature of trading. You have to accept that during periods of low volatility when complacency is high, you have to train yourself to not give into the temptation to keep up with people who are utilizing different trading strategies. Because remember, during times when the market is flat or during times when the market is going down, you are probably going to significantly outperform them. The only time that they're going to outperform you is when the market is relatively euphoric and it's going up every single day and volatility is extremely low. During those time periods, you, as an option seller, should not be trading very often, and you definitely should not be trading a large number of contracts. So remember, the thing to do is to train yourself to be disciplined and not trade during times of low volatility. Remind yourself that your time will come, and it will. As Jim Rohn once said, you suffer the pain of regret or the pain of discipline. The difference is that the pain of regret weighs pounds, where the pain of discipline only weighs ounces. So train yourself to be disciplined, and you can achieve annual returns of about 35 to 40% a year. David Jaffe with BestStockStrategy.com. Visit BestStockStrategy.com, enter in your email address, and receive over $400 of valuable free training. Please like, comment, share, and subscribe to the channel and click the notification bell. And I really appreciate your attention, and I look forward to seeing you in the next video.